Alright guys, welcome to another video. Alright, so um, in this video we'll be talking about implementing the Asian range. Alright, so this is the topic for this video. Right, and what we'll be talking about includes understanding Asian liquidity. We're talking about time and price. We're talking about the trading model you can use for your London session, right? It's an A+ trading model, and then we'll be covering a bit of the power of trade, right? So these are the concepts that we use in this module, all right? So let's begin. So now the Asian range is one of the most important aspects of the London session, because if you want to be trading the London session, you have to have an idea of the Asian range, because that is where you'll be framing your smart money trade ideas. All right, so it's based on the logic of teaching you guys. It's actually a very easy setup, right? It's kind of easy, but it's very beautiful, well mastered. All right, it's actually a setup I dub a bread and butter approach to trading the market. So I won't make the video so long. I'll just be going straight to the point so that this video will be actually brief. All right. So now let's talk about the Asian range, right? So the Asian range, it denotes the high and low formed between a particular time period during the the New York close hours, right? So it's a time window in the New York close hours, right? When the market is not actively running. So the time we are looking at for Asian range is basically what between the 8 o'clock. I'm using so we're looking at the window between 8 o'clock GMT -4 to 12 o'clock. So looking at this time window to delineate your Asian range, right? So you're looking at your Asian range, right? So, and all this is what's in New York time, right? So whatever, wherever you are, whatever time zone you are under, you have to be using the New York time to get what I'm talking about, right? So the easiest way to do that is simply to come to your trading view. You come to this point right here, the right bottom right. Then you click on time zone. Then you can swap and come towards New York. So you're setting your time in New York, right? So I'm able to get what I'm talking about. All right. So to make it easier, there's actually an indicator that I can use to help you do that. So it's actually an indicator. It's called key zones. You can come to this tab. You can click on indicators, and then you can type in Q zone. Let's type in Q zones, right? So, so Asian range and Q zones. Yeah, this one. So you're using this one, right? This one, Asian range and Q zones. Right? So you just click on it. It will appear. So that is what this is. So you click on Asian range and Q zone by RJK Trader, right? So you click on that and it will appear just to make it easier for you, right? So, and then when you have put it on your charts, sorry, when you have put it on your charts, you have to set it, right? So come to settings, and the next thing you want to be doing is to make sure that the time is set. All right, you come here, Asian range, put it between what 8 o'clock, right, to 12 a.m. Right, so this is it. So you do that and you say done, right? Whatever other settings you want to put, you have key zones here. The other key zone settings are available as well to help you to key zones. So that is up to you if you want to also toggle that on, right? So that is it. Okay, right. So this now you have the Asian range, right? All right. So let's put this back on, right? So we are talking about implementing the Asian range. So this is the topic once again. Right, this is the topic, and let's begin. So now, under this model, I said I was talking about several things. We're talking about understanding the Asian liquidity, and I've introduced the time window you're looking at. Right, I've introduced the time window that we're looking at. Right, I think I should put back the things we're talking about. So let me just take this all out. Right, so yeah, this is it. So I've mentioned the time window you're looking at, which is what between 8 o'clock to 12 o'clock New York time, right? That's the time you're looking at to get your Asian range. So now, usually when you are looking to take a trade during the London session, right? If you are bullish, you want to anticipate that price will trade below the Asian range, right? So you can denote this by what your Asian range, right? This time window is your Asian range. I know it's between what 8 o'clock to what between 8 o'clock to 12 o'clock New York time, right? So you can simply put that in 8 o'clock to 12 o'clock, right? New York time, right? So I'm also talking about time and price now. So 12 a.m. Sorry, yeah, that's your Asian time window, right? So this is your Asian range window. This is your period, the time window between your Asian range now. So if you are bullish, you want to see price drop below Asian range, right? So this is Asian time, this is Asian range now. So this is Asian range, the time window. So you want to be denoting the high and the low of the Asian range, right? So you have to denote the highest points that price got to during the Asian range, right? And then the lowest point that price got to during the Asian range before the time window comes to an end, right? So right, that's what you're basically doing, right? You want to denote that Asian range. And then if you're bullish, you want to see price drop below the open of the midnight candle and possibly take out the Asian range, Asian low, and then you want to be buying what below this Asian range or after price has gone below what the Asian low. So the low of the Asian range is your target if you're bullish. Why? Because according to the power of three, when the market is bullish, or if you see a bullish candle usually it creates a wick to the downside before rallying higher. This is what a bullish candle looks like, right? It usually was open on a daily candle rather. So you usually see a daily candle open, drop below before rallying higher. So that's what I'm going to say. So if you are bullish, you want to be buying the market when price has done what giving the manipulative phase and then rally up. But I learned this power of three from the inner circle trader, right? So it's not my concept, or I didn't discover this. I learned it from inner circle trader, right? So credits to ICT, right? So now we had that out of the way. So you want to basically see the daily candle trade lower before rallying higher when you're bullish, and vice versa when you're bearish. So if you're bearish, you want to see price rally higher, and then you're looking for sales after price has gone higher. Then you can look for sales. All right. Note, you're not trying to guess the top or the tip of the candle. You want to just be sure that you're on the right side. So it doesn't matter if you get short here at the week or inside there, as long as you have not, the market has not gone so far, right? Has not expanded so far, right? So you want to be catching yourselves if you're bearish when the market's rolling higher, and then you can catch it for yourselves. Why, if it's bullish, when the market will go down and then rally higher. So how do you know that the market is bullish or bearish? That's what you have to do your top-down analysis, right? So we're not talking about other analysis here. We're not talking about what the Asian range or implementing the Asian range, right? So basically, you want to see price drop below this point, and then looking for what longs during what the London session. So this period now is what we call the London Q zone, right? So during the London Open, so looking so the London Open, like the London Q zone, right? So London Open or Q zone, right? You're looking for what? You're looking for what? A reason to do or go long, right? So when the market has gone below the Asian range after 10 o'clock a.m., right? So looking for longs, and then want to do what? Want want to do was take price higher, right? So once market drops below, what you see market do was expand all the way up. So market can likely go below this, and then when you see market expand all the way up and continue what's going up, right? That is basically what you're looking for in the Asian session. So I've just combined everything: Asian liquidity, time and price, London session, all of it. So I don't expect an Asian structure to be mitigated, right? I like to see this taken out before they was rally higher if I am bullish. Why, if I am bearish, I like to see price do the opposite. I want to see price rally above what the Asian high, and then I look for short opportunities to do what to go what lower, right? So you can make the Asian low your first target, and then any liquidity you have below your overall targets, right? So you have to always combine this thing with higher time frame analysis, right? It's not just a model that you just look for Asian. No, you have to come. If the market is poised to go higher, then you're looking for the market to drop below the Asian range and then rally higher, and then all of that. So I talked about all these things. So let's go to the chart and look for this stuff, right? Now we are in the euro dollar. Right? Euro has been poised to go up for a long time. So We're going to be using the 15 minutes time frame so that we can get a very good hang of it. So we're going to look out for, let us go back in time. So EU has been poised to go higher for quite a while. Right, so let us look at this swing from here up to this point, right? Let us see if we had those kind of setups, right? I don't the market has been consolidating so much. I'm looking for a very perfect trending market, right? Let's look for a very perfect trending market. The market has been perfect, was perfectly trending because this market has been ranging, right? This works perfectly when the market is in a kind of bullish trend, right? So let us look at this point. This is Monday, right? So let's look at from Monday. Let's look at from this window from Monday, right? So let's look at from here. This is Monday, right? So this is Monday. Yeah. So let's look at that. So they're looking for what's bullish price action. The market is bullish, right? So now you can either use your indicator, just you will see it. So once you click on the indicator, it will show you your Asian range, right? You can see that the Asian is between what 8 o'clock to what 12 o'clock, right? So you can see how this thing forms. I want to be sure that it's right, yeah. So you can see how this thing forms, right? This Monday, right? You can see that in every bullish day, what happened? Price was went below what Asian was low, and it was really higher, right? So you can see the same thing here. Price went a bit below, although did not clear it, right? But it kind of traded below it before rallying higher. Look at this as well. Asian range, price going below it and then rallying higher. Look at this Asian range, price was rally below Asian range and then rally higher, right? So it's only here we have your reversal. So if you are bullish, this is basically what you're looking at for. Looking for price to go below was the Asian range, giving what a reason to go long, right? Number one, you want to see price go below that Asian range and then give you what an opportunity on the lower time frame. I'm here to discuss that, right? I'm not discussing confirmations, right? So I have to wait for a lower time frame confirmation, right? I can see one here already, a kind of break of structure, right? All right, so that's basically what you're looking at for if you're bearish or bullish. All right, so you can see how this rallies perfectly. Can you see this? How the market has it was perfectly. Can you see it? So once market goes below this Asian low, you're looking for what a confirmation to do what to go long, right? So inside this area below is where you're looking for your reason to do what to go long, right? So another thing I forgot to mention, you have to also make sure you mark out the time that the New York open or call, right? That New York midnight time, you want to see price rally below it and preferably below the Asian low, right? So disclaimer, it's not every time that price goes below Asian low, right? But usually to go below what the New York open. So basically, if you're using the Asian range, this is an Asian range video now, right? So if you want to implement using the Asian range for your trading confirmation, right? I don't say price go below the midnight open and preferably below the Asian low in this time window. This is the Asian range, and then look out for what's your buy confirmations here. So this you can see this. We had our midnight candle open here. Can you see somewhere around there? It didn't go below Asian range, but it's still rally below the midnight candle and then rally higher, right? So there was actually a shift of market structure here because market broke this high. That's why it did not come below. So we had market rally below the midnight open, giving a break of structure to the upside, and then it came to retest this other block and then it's rallied higher, right? So the same thing occurred here. Market went below the Asian low, gave a kind of confirmation inside there. So if you want to learn about confirmations, you can send me a DM to join our paid mentorship program, right? So let me just use this opportunity to show you guys some things, right? So I'm going to show you guys some things that you need to see. All right, let me just show you guys something that you need to see, right? So this is our official Telegram community, right? So you can see how busy it is, right? We always post a lot of beautiful stuff or posting information, right? And this is where I'm most active, right? This is the Telegram channel. So use the link to join our free Telegram channel, right? You can always get all our updates, our stocks, our new events, our trade setups, everything is here. Look at a cryptocurrency, which I call for them to take, and many of them have gotten this cryptocurrency. Airdrops are being featured there. So that is it. So if you want to also be part of our paid mentorship group, it's very, very affordable, right? You can see this is it right there. This is the you can see it here. We have a Forex program where we teach you in synthetic indices, whatever you trade from scratch. You learn risk management, proper psychology. We have live classes every week. We have access to the community of traders. We have so many giveaways. We fund traders. There are so many stuff in our paid mentorship program, and it runs for 1 year from your day of joining on. It runs for only a price of $58, which is 35,000 naira in my local currency, right? So if you want to be part of a paid mentorship program, do well to join us. It's not too expensive, and I think this should be the end of this, right? So let's go to the chart. So now this is basically what you're looking at for. So you can see here, price, what happened, it still went below what the midnight open and went below Asian low, confirmation, rallied higher. So the same thing here is a midnight candle. At first, it did not go below. That is not what we're looking for. We want to see price go below before we look at for what confirmation. So we saw a midnight candle. We want to see price 3 below, and it happened. So it's went below the Asian consolidation, and then it broke back upwards. So this is basically what you're looking at for when you're bullish. And the reverse is for what? A bearish scenario. If you're bearish, they're looking at for what? The reverse, right? So this is basically what you're looking for if you're bearish, right? So this market has been a kind of consolidation, right? It has been a kind of consolidation, right? So I'm not looking for this has been a kind of ranging market. Look at it here. Consider market has been ranging since then. So this is appears best when the market is trending, right? So the market was predisposed to go lower. You can see the market ran below. This was a kind of seek and destroy pattern. That is not what you want to see. You want to see market clearly bullish, right? You want to see market in a clear bullish setup, right? So this is what I'm looking out for. All right, so I think that this comes trying to look out for bearish ideas. Right, so like this, market went a bit above it and before it dropping lower, and then you can see the same thing occurred here. When the market was bearish, it rallied below above what Asian range and then sold off. So if you're bearish, it's just the opposite of this, right? So that's just basically how I use the Asian range, right? Very easy, very easy, right? Very easy. So you must not just trade this isolated. You must combine it with your higher time frame. So, but the best time frame to look at this is just on the 15 minutes, right? You mark out your Asian range or you use the indicator, right? Either you use your indicator to mark out between 8 o'clock to so you convert it to a local time and then you get it or you use this indicator to identify the Asian range, right? So this is basically all for this video. So I'll be dropping more content. So if you love this video, do it to like. So look at the bullish setup here. Market ran below it and then this was the Q zone window. So this blue line means New York, London Q zone. So you can see in the London Q zone, market ran below it and then confirmation rallied up. Right. So that's basically what this is all about. Right. So I hope this was insightful. I wish you guys a wonderful trading and see you guys in the next video.